In 1956, Warren Buffett started with $105,000. By the time Wall Street figured out what he was doing, he had turned it into $100 billion. But here's what nobody talks about. It wasn't the stocks. It wasn't the analysis. It wasn't the intelligence. The secret behind the greatest fortune in Wall Street history was something so simple, so invisible, that the smartest people on the planet missed it for 60 years, and most people are still missing it today. Wall Street, in the 1960s, was the most dangerous arena on Earth. The smartest minds, the fastest systems, the most ruthless traders. And they all watched him. From the moment he started, they watched. They studied every move. They copied every position. They read every letter he wrote. They flew across the country to sit in his meetings. They built billion-dollar systems designed to reverse engineer his thinking. And still, the gap kept growing. The gap grew. The gap grew. The gap grew. By 2000, after 40 years of the best minds in finance trying to beat him, he was worth $36 billion and accelerating. Nobody could explain it. He wasn't doing anything they couldn't do. He was reading the same reports, looking at the same companies, watching the same markets. But something was different. Something fundamental. Something invisible. And nobody on Wall Street could find it. The best analysts in the world put him under a microscope. They broke down every trade, every position, every decision he had made for 40 years. They found nothing. He wasn't getting inside information. He wasn't using a secret formula. He wasn't doing anything they couldn't replicate. He was just sitting there. In a quiet office, in a quiet city. Far away from all of it. Just reading. While they were moving at the speed of light, he was completely still. While they were burning through thousands of trades every week, he was making almost none. In 1988, he bought Coca-Cola and simply held it for 30 years. No selling, no reacting, no chasing the next thing, just holding. While the market crashed in 1987, he didn't move. While the tech bubble exploded in 2000 and erased $5 trillion, he didn't move. While the entire financial system collapsed in 2008, he bought. Every time the world was on fire, Buffett was walking toward the flames, not away from them, and nobody could understand why. They called it luck, then timing, then connections, then old-fashioned thinking from a man who didn't understand the modern market. They called it anything except the truth, because the truth was something deeply uncomfortable. The truth meant they had been playing the wrong game their entire careers, and they weren't ready to see that. So they kept moving faster, built better systems, hired smarter people, spent more money on more technology, and kept losing to a man sitting quietly in Omaha, reading annual reports, drinking cherry Coke. Something strange started happening to the firms that chased him. Long-term capital management, run by two Nobel Prize winners, collapsed in 1998. Lehman Brothers, 158 years old, gone in 2008. Bear Stearns, gone. Merrill Lynch, gone. Brilliant people, brilliant systems, brilliant strategies, all of them gone. And every single time one of them fell, Buffett was still there, still reading, still patient, still winning. The market crashed, and he didn't flinch. Recessions came and went, and he didn't flinch. The worst financial crisis in a generation hit, and Buffett made money. Because he understood something about time and crisis that they never did. Crisis wasn't a threat. Crisis was the moment the weapon loaded. His rivals were playing a game with one rule: move faster than everyone else. Buy before the news breaks. Sell before the crash. React before anyone else can react. Speed was the weapon. Technology was the weapon. Information was the weapon. Every year, they built faster systems, hired smarter analysts, gathered more data. Every year, the gap between them and Buffett got bigger, not smaller, bigger, and nobody could explain why, until you understand what he saw that they didn't. His rivals treated time like a cost. Every day without a trade was a day wasted. Every year without a big move was failure. They were spending time, burning through it, trying to win today. Buffett saw something completely different. He saw that time, for the right things, wasn't a cost. It was a weapon that got stronger the longer you held it, A weapon that couldn't be bought, couldn't be built, couldn't be copied. A weapon that only worked if you had the patience to let it load. His rivals were making hundreds of trades a year. Buffett was making almost none. His rivals were measuring success by this quarter. Buffett was thinking about the next decade. His rivals were terrified of missing a single day in the market. Buffett understood that missing the right days didn't cost you. Moving on the wrong ones did. While they were trading time for money, he was trading money for time. And time, given long enough, always won. Every year his rivals chased the next thing, they reset to zero. Every year Buffett held something good, it compounded. Not by a little, by an amount the human brain struggles to comprehend. $1, held in the right place for 50 years, becomes something that makes Wall Street's best annual returns look like rounding errors. That was the weapon. Not the stock picks, not the analysis, not the intelligence. The weapon was patience, weaponized into a mathematical certainty. And Wall Street, with all its Nobel Prize winners and trillion-dollar systems, never understood that. Because you cannot buy patience. You cannot build it. You cannot copy it. You either have it, or you spend your entire career losing to the man who does. In 1965, Buffett took control of Berkshire Hathaway. It was worth almost nothing. A failing textile company. Everyone thought he had made a mistake. 58 years later, one share of Berkshire Hathaway was worth over $500,000. The textile company that was supposed to fail became the vehicle for the greatest wealth compounding in Wall Street history. Not because of what it made, because of how long he held it, because of what time did to it. By 2023, 67 years after he started with $105,000, Warren Buffett was worth $116 billion. The firms that tried to beat him, gone. The analysts who dedicated their careers to cracking his code, retired, gave up. The systems designed to make him obsolete themselves. And Buffett, still sitting in Omaha, still in the same office, still reading, still patient, still holding, still winning. He outlasted all of them, not by being smarter, not by being faster, by refusing to run out of time. Everyone saw stocks. Buffett saw decades. Everyone saw the market. Buffett saw the clock. Everyone saw opportunity in speed. Buffett saw it in stillness. Everyone traded time for money. Buffett traded money for time. While the entire world was racing, he was waiting. And waiting, done correctly, is the most aggressive move a person can make. The hidden advantage was never the picks, never the research, never the intelligence. It was the one thing everyone else treated like it was running out, and Buffett treated like it was unlimited: time. His rivals spent it, he aimed it, and once he understood that time would always outlast speed, that patience would always outlast urgency, that stillness would always outlast noise, the game was already over. Most people are still playing the wrong game, moving fast when they should be moving slow, reacting when they should be waiting, spending time when they should be collecting it. The market has always been a machine designed to do one thing: transfer wealth from the impatient to the patient. And for 67 years, Warren Buffett was the most patient man alive. The most dangerous investor who ever lived didn't beat the market. He refused to let the market set the rules. That invisible advantage, hiding in plain sight since 1956, was the secret everyone was too busy moving to see. Buffett, Vanderbilt, or Rockefeller? Who had the most dangerous hidden advantage? Drop it below.